Interesting to see what happens to this trade deal, and whichever shape and form it takes, how soon can it help restore some sanity to growth for both the economies? Because as China's forecast for 2019 shows that the trade war is already hurting, and it might at 6% show the lowest growth in 3 decades. So what does all of this mean for global financial markets? More importantly, let's pose this question to Seth Freeman. He's Senior Managing Director at GlassRatner Advisory and Capital, joins us on the phone line from San Francisco. Seth, good having you. Thanks so much for joining in. Thanks so much for staying up
Thank you.
as well. What do you make of this whole negotiation on the trade war and China's growth forecast of 6 to 6.5%? What does it mean for financial markets? Because typically in the last couple of decades, we haven't necessarily seen equity markets toe the curve of the GDP growth that different economies show.
Well, this is one of the lowest growth for China in some time. And, I think it shows partly the maturing of the marketplace and its structural changes, and most likely some of the impact on exports due to the trade war. On the other hand, of course, in 2018, a lot of imports from China to the United States were front-loaded. But we're in a transitional point, and I think that we're also seeing slowing growth, across the world.
Would that have a big bearing on the Chinese market set? That would be the first question, because, as I said, when China's economy grew really well, it was not as if the markets went bonkers. And if the MSCI weightage on China is set to increase and flows go out there with the valuations that it is trading at, would the Chinese markets really get bothered if the growth slows down to 6.5%?
Oh, I think that's a significant marker for a slowdown, and it should affect the money flows significantly. So it should be interesting to see what happens in the following days.
So how are you keeping the larger emerging market pack, and what's the view there, Seth? Because China, with all the stuff that we spoke about, India has the elections coming up, and the cross-border tension hasn't quite gone down as yet. What do you do with some of the larger emerging markets?
Well, normally the market does well during the election, during the run-up to the election in India. So that should get investors' attention. There's still quite a bit of political overhang in terms of from at least U.S. investors looking at China. But I think in general it's positive for India. And I have been surprised, frankly, that the increasing skirmishes at the border with Pakistan hasn't had the same kind of effect we've seen in previous years.
Why do you reckon that's the case? Is the market discounting this as something that will not escalate too much?
Well, it's interesting because it seems like the activity is at a much higher level in terms of planes and India going into Pakistan and so forth, both sides being more aggressive. But maybe it's just because there's not as much just focus given other activities in India, like you said, the election. But you would also think that this kind of fits in a little bit to the nationalist story to go after Pakistan. So maybe it is actually related to the election.
Seth, so therefore, my final question on this conversation, what's your view on the Indian markets right now? Would you go out and tell clients to invest into India with whatever the markets are discounting right now, both on the geopolitical as well as on the election front? Or would you advise people to stay put and wait for the results to come out in print before we move ahead? Yeah.
Well, I'll tell you, over the last 15 years, I've maintained a long-term view on India, and that doesn't change. I think for investors, we have to also, for U.S. investors or dollar-based investors, we also have to look at the rupee depreciation, because that if the rupee's declining and the market swoons, it's sort of a double hit for USD investors. So I think that has to be a consideration, because if you factor in the market, the index growth, and back out rupee depreciation, the returns are not as high. But the long-term growth for India, in my opinion, is totally intact.